This is your Minister of Capitalism, Brett Davison. And today I want to answer the question, can people really make money successfully from options trading? I think you might be asking the wrong question here. You seem to be implying that there might be some sort of luck involved when it comes to trading options. If you're a trader, then there's no such thing as luck. It's just risk that we can take into account and manage. The end goal of any successful options trader is to reduce the likelihood of catastrophic failure in order to maximize profits for your trades. Here are 3 things I recommend all traders do. First, get rid of those old crystal balls. Second, and this one might be hard, learn about how volatile markets work without becoming discouraged or angry when they don't go your way. Third, last but not least, think rationally before panicking. Companies are all different, and this makes predicting their stock prices a little more difficult. However, there is one thing that's certain: your predictions about the company matter. You will need to consider its product as well as who it competes with. Does it have an affordable product? What risk does the company face? Who leads or bought them out? And what was their strategy for success if they did? And do they know how to make a profit consistently over time while maintaining shareholder value? One of the most effective methods to analyze a stock's future is by examining its past. How has it responded in relation to various market events, and how has it affected their revenue? Past efficiency is an assurance of future outcomes, but many algorithmic trading programs make automated decisions based on graph patterns and cost movements in an effort to determine where a company's stock price is headed. This impact is likely more noticeable for temporary or event-driven moves, where a single movement or tactic might be better suited to shorter-term strategies. Trading these days is a complicated game, but there are some players who have mastered the basics. You need to develop your skills in basic evaluation, which can help you in predicting where a stock might be headed. One important skill to develop is that of reading quarterly income declarations so that you know what's going on inside the company. From there, you can begin to look into things like free capital, financial debt, margin level, etc., and how they are aligned with other market factors, such as valuation ratios, i.e. price-to-earnings ratio. Having this sort of understanding will give you a solid foundation to see how the stock market works. The market never sleeps, but when it does, you can leverage this to your advantage. There are many other factors that influence a company's stock price. Things like news stories, product developments, and so on. Trading can be a risky venture, but you don't have to guess when you're trading. Use your mind and expertise. And if you don't have enough financial knowledge, sign up for a Stock Alerts website and follow the trades of a pro. This will help you not only develop your trading skills, but it will give you a chance to make money as you learn. Understanding the risks of your trades is an important step to becoming a successful trader. For example, some places offer more risk than others, and while buying long calls might be safer than shorting stock options, both expose you to a certain amount of risk. Do you know the risk of each method that you use? The bottom line is, never invest more than you can afford to lose. The most important thing about any investment decision is understanding all aspects involved. There are many factors to think about when options trading. You must consider not only the risk of each trade, but also how that loss will affect your portfolio overall. A great thing to know is the purchasing power of your account. And while determining purchasing power is beyond the scope of what we're talking about here, for now, you simply need to know that if you overextend your buying power and the market changes, you could experience a margin call. If this happens, your brokerage company will contact you and either force you to close the trade or deposit more money into your account in order to cover the trade and keep it open. At the end of the day, the best traders are the ones who follow one strategy and do not trade on emotion. It's a tough skill to master, but it gets easier the more you practice. The options market offers a lot of different strategies, and if you've done your research well enough to know what methods work best for certain situations, then it should be much easier to do the math. If you spread out risk by diversifying across several shares, stocks, and trades, it helps reduce your overall risk. There's one other quick thing for you to keep in mind in this all. When you're on a winning streak, it can be tempting to get greedy and want more of that sweet success. Even if you're winning, make sure you use proper money management. Make sure you keep enough cash in your account to cover your trades in case your luck changes. You never know when those gains will dry up or who might make drastic changes out of nowhere, which could totally screw everything up for you. If you've stuck with me through this all, I just want to say congratulations. You just might have what it takes. It will take a lot of effort and patience, but with dedication and perseverance, there is no doubt that you can make your investment goals come true when you trade options. And if you want to get started on the right foot, I recommend that you join us as a member inside the Empirical Collective. You can check it out at theempiricalcollective.com. Once again, this is your Minister of Capitalism, Brett Davison, and I wish you all the trading success that you can handle.